I'm going to walk you through step by step how I create my pre-market watch list every single morning. And the 5 steps are:
Warning, there's no Lambos here, no getting rich quick, and there's no day trading secrets that's gonna cost you $5,000.
I know, you must be really disappointed now. I guess I'll have to actually give you real, no bullshit, valuable information on day trading. If you're a long-time viewer of this channel, you know I always preach that you plan your trades and trade your plan. I found that in trading, one of the most important aspects is focus. It's way too easy to get sidetracked by chat room alerts, what people are saying on Twitter or stock tweets, or even the intraday alerts from your own momentum scanners. And unfortunately, that's the biggest reason most beginner traders blow up their accounts or slowly bleed it out with small paper cuts. I'm saying that because I understand. I've done exactly just that myself. Nowadays, I spend about 2 hours before the market open to prepare for my pre-market watch list. But don't worry, this video isn't gonna be 2 hours. I have condensed my watchlist planning process into 5 simple steps. Note that I said simple but not easy. Trading is never easy, but you can increase your success rates greatly by having a plan. And all it's costing you is a simple tap on the like button. So the first step to creating a watch list is scanning for gappers pre-market. Gappers are stocks that have gapped up or gapped down with a dramatic percentage overnight. Technically, it could be due to earnings, news, clinical trials, or other deals and agreements. And the reason it's so important to look for gappers is that there's likely to be an immediate reaction to the stock in the first 2 hours. And as day traders, that's exactly what we're looking for. We're looking for momentum, volume, and volatility. There are several ways I use to scan for pre-market gappers. The first one is with Benzinga Pro. I've already made a video showing you my settings on how I scan for both the small cap and large cap gappers using the movers module. Besides Benzinga, I also use Trade Ideas for the same purpose. Sometimes both of these scanners will give me a list of similar results, but I'll be going over why I choose to use both of these scanners specifically in the next few steps. A third resource I use to scan for pre-market gappers is Briefing. This is a great resource for people who trade mid-cap and large-cap stocks. Briefing is a web-based service that provides you live market commentary and analysis. This tool was extremely helpful during the summer months when the small cap penny stocks are pretty slow. But the low floats have been really hot lately, so I haven't used Briefing as much. The fourth resource I use to scan for gappers is with my execution platform, DRYS Trader. They provide you a list of all the pre-market gainers every single morning. They call this the Toplist. This feature comes with a platform subscription. Now, the fifth way to scan for these gappers is finally free to use, but I personally don't use this feature anymore, which is the Thinkorswim Pre-Market Scanner. This tool isn't that ideal because the scanner takes a long time to refresh, and it's not as fast as all the other tools I mentioned earlier. And as a result, I used to miss all sorts of pre-market movers because the scanner was delayed. But I mean, it's free after all, and it's a great way for beginner traders to get started. I go over how to set up the scanner in my Thinkorswim tutorial video. Now, it doesn't really matter how you find your gappers, either with the 5 resources I mentioned earlier, or you got it from a subscription email or chat room service. What's more important is that you do your own research on the news catalyst, which is the second step to creating a pre-market watch list. Because not all gappers are created equal. Some news headlines will generate more hype and follow through, while others are just blatant pumps. But the key is knowing that there is indeed a published news headline on reliable sources like Benzinga, Yahoo Finance, or Finviz. And why is a published news headline so important? If you remember these penny stocks in recent years, like DRYS, LFIN, and DGLY, those stocks were actually halted with a T12 halt. The trading on these stocks were put on hold by the Nasdaq Stock Exchange for several days, weeks, or even months, because because you haven't smashed the like button. As always, these videos take me 10 to 12 hours to make. That's the time I could have spent driving my Lambo, chilling on the beach, and making millions on the toilet. So if you wouldn't mind taking 1 extra second to tap the like button, I really appreciate you, my friends. And the reason these stocks I just mentioned was put on a T12 halt is because the Nasdaq exchange is requiring more information from these companies. Usually that's after these low float penny stocks are making 300%, 500%, or even sometimes 1,000% moves with no valid news. So the intention of these T12 halts by the Nasdaq is to protect investors from these companies that are potentially violating the federal securities laws. Whether that's actually true or not, we're not gonna get into that today. And that's why knowing that there's a published news headline is so important. If you were stuck in a T12 halt, your funds could be tied up for weeks, days, or even months. This is not the same as a T5 volatility halt that usually lasts for less than 10 minutes. And imagine if you were using margin buying power. I have a friend who was short LFIN around $24 before the halt, and he had to keep on wiring money to the broker throughout the next few weeks because he was short too big of a position. And yeah, even though LFIN unhalted at $7 like 6 weeks later and he made a killing, that emotional stress over 2 months was not worth it. If you want to learn more about all these different Nasdaq trading halts, I'll leave a link for you to read more below. Okay, so now we've established the importance of news. It doesn't mean that you should just go buy every single gapper with news blindly and make quick, easy money. If you're following chatroom alerts to buy high of the day breakout on every single stock that has a headline, well, I have some breaking news for you. You see what I did there? You might get dumped on if you do not analyze the news. So I used 3 of the tools I mentioned earlier for news research. They are Finviz, Benzinga Pro, and Briefing. Using Finviz is perfectly fine to get started, but I use Benzinga because they are lightning fast with their news updates, and they provide me with the most complete information regarding halts above average trading volume with no delay. And next we have Briefing, which is my news resource for mid-cap and large-cap stocks. This is where I can check the stock's earnings, upgrades, downgrades, and other major news resources summarized briefly. So it saves me so much time, just like Benzinga. So after collecting all the news headlines, we have to analyze it. Generally speaking, I categorize all the PR into 3 different categories. Now, the true significance of each news headline will obviously be different for each particular stock. And of course, whether the stock is a small cap penny stock or a mid cap and large cap stock that's a real company will also be a factor as well. The first category is positive catalyst. This could be potential deals, good earnings, positive drug trials, potential buyouts, or global trade news that's favoring a specific sector. For example, SORL was a gap up pre-market from a news of a potential merger agreement. The conversion price was going to be $4.72 per each common stock, which is important when you're trading merger agreement news. Yes, the catalyst is overall positive for the company, but unless you know the potential transaction price and whether that price is significantly higher than the previous day close price of the stock, that merger news is not going to move. The second category is obviously going to be negative catalysts. This could be a fallout of a deal, global economic crisis, or the stock is issuing an offering or getting delisted by the Nasdaq, which we have seen happening a lot recently with the small cap penny stocks. For example, SLDB, a small cap biotech drug company, had one of their drugs put on hold by the FDA. As a result, the stock gapped down overnight on November 12th and continued selling off for the rest of the trading day because the news was extremely bearish for the stock and for this biotech company that's relying on drugs getting approved for them to sell in order to generate revenue. Now, the third category of news is fluff news that are actually disguised as positive. This is extremely important to recognize when you're trading small cap penny stocks, because a lot of these companies use really optimistic and positive wording in their PR in order to pump the share prices up. So there are a few keywords that you can use to identify that this PR could potentially just be fluff. And of course, this is a general guide only. Each stock is going to be different. Some really common pump keywords are possible deal, engagement, optimistic outlook, in the talks, and potential partnership. Anything along those meanings in the gray area suggesting that something could happen, but it also might not happen. It's kind of like when you buy a DVD that promises you to potentially make $1 million, but you might just have to lose $100,000 to get there. Technically, they're not lying because your potential is only as big as your dreams. Just like technically, it could start raining Lamborghinis tomorrow. Theoretically, that's possible. Sometimes these news are even a few days to a few weeks old, and they just recycled it and repackaged it as brand new. Just like one of my favorite pump stocks, CANF here. Theoretically speaking, in a perfect world, positive catalyst means that the stock should go higher, right? And vice versa. If the catalyst is negative, that means the stock should dump. But unfortunately, nothing is 100% guaranteed in day trading. We have seen stocks with blatant pump news running 200%, 300%, and also stocks with amazing earnings selling off the entire gap. Stock gappers with news doesn't always guarantee the most obvious direction to the upside or downside. We also need to look at the key statistics of a stock, whether the stock was a recent reverse split, how it's setting up technically on the daily chart, and using past screen time and experience to make educated plans. And that's the importance of the next 3 steps. In part 2 of this how to create a pre-market watchlist video, we'll be putting all 5 steps together. I know it sounds hard, and I know it doesn't sound like you can make $1 million in 6 months. Creating a trading plan can be simplified into a few steps, but it's never easy. But again, if it's too hard and too much work, then maybe following chat room alerts easier. This video really took me a long time to make. If you want to see a part 2 to this step-by-step guide into making a detailed pre-market watch list, let me know in the comments down below. And don't forget to always destroy the like button. Thank you guys so much for watching as always, and I'll see you guys next week.